Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Dan Innes and Nicole Dines. Of course, we had a big focus on US midterms and inflation playing a huge role in terms of the voter intentions there. And also inflation, some of the challenges in the market, but also some of the opportunities came through in our CEE investment briefing that we did over the week. Nicole, what were some of the key things that came out of that for you?
Yes, that was a really interesting briefing with lots of experts that were hosted by CMS at the London headquarters. And the consensus was that CEE is a very hard sell, as they put it at the moment, because of geopolitical concerns. It is seen as sort of too close to Ukraine. Robert Martin of Europa Capital said that the war does not affect the market in any way. The fundamentals are still very strong, but perception of risk is there. And sentiment is all about perception. There's a big difference between local investors or European investors who know the market and know the fundamentals are strong. It's a very hard sell when you try and persuade investors in Singapore or in the US maybe, who are not so close to the market and who just have that very strong perception of risk. Otherwise, CEE, much like the rest of Europe, had a very good Q1, a very good start to the year. Then the war happened and the energy crisis, the economic slowdown. According to Collier's figures, full investment volumes for the full year should be around 9-10 billion euros, which is lower than the sort of 10-year average of 10.3 billion, but still, pretty respectable sum in the current climate. And Kevin Turbing of Collier said that they expect now, with the slowdown, a fall in capital values around 15 up to 30%, but it will very much depend on the place, the location, and the asset and the asset class. Domestic investors in this period are taking advantage of the opportunities because, as I was saying, they know the market, so they're being a lot more active than foreign investors. At the moment, the figures are 30% domestic, 70% international capital. The situation varies. As we know, Poland is at one end of the spectrum with 98% international capital and only 2% domestic, while Hungary is on a 50-50 split. So the situation varies a lot between sort of 6 CEE countries. But it was said that by our expert that Czech and Hungarian investors in particular are really active in the market, and they're sort of jumping at every opportunity across the border. So we expect to see more of that. And looking at the sectors, according to Collier's figures, again, office and retail have attracted the most investments so far this year. But all the experts agree that residential has the most potential looking ahead, especially PRS, because there's a shift to renting, as we've seen in other countries in Europe. There's a shift to renting in each CEE countries because of high prices and higher interest rates, which are obviously making mortgages unaffordable for a lot of people. Just to have an idea, interest rates are 6.5% in Poland and sort of eye-watering 13% in Hungary. So definitely an issue there. So strong potential for PRS. And another sector that's really growing is logistics, which is, of course, already a very big sector because of the great location of CEE countries, but it's boosted by new factors now. One is the inshoring trend. Companies want to be closer to their customers. The other one is prices. It was said that Poland is more competitive than China on labor costs. So that's another factor that's attracting investors to the sector. And then there's a Schengen factor, that Romania and Bulgaria are set possibly as early as December to join the Schengen area, the borderless, sort of frictionless area in Europe. So far it's been blocked by the Netherlands, by the Dutch government, that's concerned about border controls. But there's a strong feeling among European countries that they should pull together this time and show a united front. And so there's a strong chance that they get the green light in December. There's the Czech presidency of the European Union, which is really strongly pushing for this. So that should also boost logistics. So at a time of slowdown, a difficult time, but definitely lots of opportunities in the market in CEE.
Interesting as well to hear from Justyna Kiedziejewska-Klukowska from Berlin HIP in Warsaw that there was an increasing sort of interest from more opportunistic investors around whether or not there's going to be refinancing issues. So people beginning to look at those opportunities. So interesting to pick up on all of that. Dan, what have you been watching?
A lot of the newspapers and magazines are picking up on the fact of deal values and pricing in the market. EG is led with stories about those values being slashed by up to 40% as rate hikes have taken hold. And we really, we began to start following that a few weeks ago, didn't we? There are some reports that the UK real estate market has just weathered its worst quarter since 2009 in the GFC. And really, people are hoping that it's not going to be quite quite as bad as those dark days. But new data from MSCI shows that the return of its UK quarterly property index between July and end of September Q3 was the worst since that second quarter of 2009. There are some positive signs. There was an article in the Telegraph on Friday mentioning that US investors have poured as much as $1 billion into the London office market, people like Bain. This climate is having a real knock-on effect across the sector. We're not sure it's going to be really the fire sale that BizNow forecasted, last month. But really, it could be now, now's the time for opportunistic real estate investors, because capital values are beginning to decline, just as the cost of debt's going up. So, could it be a good time for them? Elsewhere around Europe, aggregate holdings, they've announced the sale of 3 segments of Berlin's Quartier Heidestrasse development, and that's at a price of about 488 million euros. React News has covered the fact that Samsung SRA wants to bring the Comets Tower in Frankfurt to the market. Brokers are apparently pitching for a role to sell that office tower, which is 1.17 million square feet, and the Korean investors looking to get a sale price of about 650 million euros for that. But again, watch the pricing. Meanwhile, apparently there's about 151 billion euros of new capital heading for the European living sectors. Investors in the student housing, multifamily, senior housing markets, those kind of markets right across Europe. They're planning to significantly increase their exposure, and that's off the back of a survey that Knight Frank brought out this week. Elsewhere in the UK, GlaxoSmithKline, GSK, they completed the sale of their surplus development land in Stevenage, which is just north of London, to UBS Asset Management and Reef Group. And those new owners, they're proposing to invest up to £900 million to develop that 33-acre site, which is adjacent to GSK's existing 1 million square foot research and development hub, to create a bit of a life science campus there in Stevenage. And that's been interesting following the life science debate and sector. Businesses like Brookfield's Core Life, gaining a bit of traction with their former Arlington Business Park and Harwell Life Science Park. So, there are signs of investment back into the sector, lots of transactions. I'm sure we'll be talking about those all the way through to Christmas, and at all the various events that we're all planning to be at. Talking of which, there's only just a fortnight left until MAPIC, which has come around very quickly, the Retail, Leisure and Entertainment show in Cannes, and that's starting, of course, on Tuesday, the 29th of November.
Yeah, it's interesting to see some of those developments in the market. You mentioned there the Knight Frank survey, and that was really interesting, I think, to see investors, looking to spend 151 billion in that sector. I noticed that Stuart Osborne, Knight Frank's head of European residential investment, said, as we face a potentially challenging macroeconomics backdrop next year, investors are looking to increase their exposure in counter-cyclical sectors with defensive dynamics. And of course, residential is one of those. I noticed that Senior Living Investment Partners, which is, of course, a partnership between Pension Insurance Corporation and Octopus Real Estate, is set to develop its first integrated retirement community via a joint venture with Elysian Residences. And Elysian CEO Gavi Stein said, Senior Living Investment Partners is further proof of the great potential of this growing alternative residential sector to institutional capital. So beginning to see, a big focus on that living side, and also the senior living side coming through as part of that. I noticed Comets Real making its first investment in the Danish photovoltaic market, a joint project with Hydro Rein, a Norwegian investor in renewable energy sources, acquiring 2 solar parks there. And Barker May-Medicic, who's global head of institutional sales and group treasury at Commerz Real, saying the Danish investment market for photovoltaic is still relatively young and is seeing a correspondingly dynamic development. And this offers the potential for growth and diversification for our institutional investors in particular. So seeing a lot there in terms of discussions around institutional investors beginning to look far more at what would have been regarded as much more niche investment areas. So we can expect to see more of that. Thank you, Dan. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.